That intense, almost uncontrollable urge hits. The market is hitting all-time highs without you. Your coworker just casually mentions their easy 30% gain. You feel that pit in your stomach, that FOMO. You fight it, you give in, you buy the top, and you feel that familiar sting of guilt. What if I told you that craving, that fear of missing out, isn't a sign of weak willpower? What if it's a sophisticated symptom of a market on a sugar high? Forget fighting FOMO. Today, we learn to decode it. Warren Buffett is sitting on a record $189 billion in cash. He just made his biggest investment in years into T-bills. He's not craving this rally. He's reading the real messages the market is sending, messages that are hidden beneath the euphoria. Stay with me, because understanding the science behind why the market is craving this rally is the key to finally mastering your financial freedom. Welcome to Wealth Architect. Welcome to the podcast where we don't just follow the rules, we design the blueprints. I'm Ben, your architect in training, and I'm here with Julian Hayes, a market historian and former fund manager. Julian, welcome. That feeling of FOMO is so primal, isn't it? It feels like a constant battle between discipline and the fear of being left behind.
It absolutely is, Ben. And for too long, we framed investing as a moral failing, a lack of discipline. But that's an outdated and unhelpful perspective, designed to make you a follower. Market cravings, both your personal FOMO and the market's collective euphoria, are complex biological and psychological signals. The market isn't trying to sabotage you. It's communicating a need for growth, a need for yield, or a reaction to massive government stimulus.
So instead of just white-knuckling it and resisting, we should be asking, okay, market, what are you really trying to tell me right now?
Precisely. That shift in perspective is the first step to empowerment. Fighting a craving makes it stronger. Understanding the driver behind the craving allows you to address the root cause, or in this case, to see the structural risk. Warren Buffett isn't fighting the market, he's just reading a different set of signals. He's decoded the messages, and his message back is, no thank you, I'm not eating that.
Okay, I am ready to become a market detective. Where do we start? What are the biggest signals, the biggest messages that Buffett is decoding right now?
Let's decode the 5 most common messages the market is sending that Buffett is famously ignoring. Signal number 1, the yield signal. Cash is no longer trash. This is the most direct message, and it's the biggest one that has changed.
For the last decade, we were told, Tina, there is no alternative. You had to buy stocks because cash paid zero.
Exactly. Your cash was losing to inflation. But today, T-bills, what Buffett just bought, are paying over 5%. This is a fundamental shift. For the first time in 15 years, cash is a competing asset. The market's craving for stocks is still based on the old habit, the old reality. Buffett is reading the new message. The message isn't, I need to risk my money in stocks to get 8%. The message is, I can get 5% risk-free guaranteed. Why would I take on all-time high risk in the stock market for just a tiny bit more? He's taking the sure thing. Signal number 2, the concentration signal, the nutrient gap.
You mentioned this in the past, the idea that the market is unhealthy.
Think of it like a sugar craving when your body is actually missing vital minerals like magnesium. The market is craving growth, but it's only getting it from one source, 7 massive tech stocks, the Magnificent 7. This is a massive nutrient gap. The other 493 stocks in the S&P 500 are, in many cases, flat or down. This is not a healthy, broad-based rally. It's a sugar high from one specific food. Buffett, a value investor, looks at this and sees no nutrition. He sees only risk. The message is the market's health is an illusion. It is dangerously unbalanced and reliant on one food group.
Okay, so the easy money isn't easy, and the broad market isn't even broad. What's the third signal?
Signal number 3, the insider signal. the smart money divergence. This is a behavioral one. You have to ask, who is craving these stocks and who is selling them? The data is crystal clear. Retail investors, the so-called followers, are buying with both hands driven by FOMO. But who is selling? Corporate insiders. CEOs, CFOs, and board members are selling their own company stock at the fastest pace in years. The message is blunt. The people who run the companies are cashing out. Buffett is the ultimate insider, the so-called smart money. He is also cashing out, or rather not buying in. He is aligning himself with the insiders, not the crowd.
Wow. Follow what they do, not what they say. That's a powerful and scary message.
It's the most honest signal there is. Now for the big one. Signal number 4. The credit signal. The gut takeover. You use the sugar craving metaphor. This is the gut health. Your gut microbiome can send signals to your brain manipulating cravings. In the economy, the gut is the real economy. It's the credit market, the regional banks, the small businesses.
And the brain is the stock market, which seems totally disconnected.
Precisely. The gut is sick. We have a crisis in commercial real estate. We have regional banks who hold those loans under extreme stress. We have credit card and auto loan delinquencies at multi-decade highs. The real economy is sending "I'm sick" signals to the brain. But the brain, the stock market, is too high on the sugar of AI and tech stocks to listen. Buffett is a gut investor. He's listening to the real economy. The message is, the body is sick even if the brain feels euphoric. A system-wide crash is coming.
That's terrifying. So he's waiting for the gut to finally force the brain to pay attention.
He's waiting for the fever to break, which leads to the final, most important signal, the asymmetry signal, the master blueprint. This isn't a market signal, it's Buffett's own signal. He is not timing the market. He is building an asymmetric bet.
What does that mean, asymmetric?
It means the potential upside of his move is massively greater than the downside. Downside, what does he lose by holding $189 billion in cash? He misses out on this rally. He might lose a potential 10 or 20% gain. That's his entire risk. Upside, what does he gain? He holds that cash until the credit signal, signal number 4, finally breaks the market. Panic, a 40-50% crash, blood in the streets. He then steps in with his $189 billion in dry powder and buys the best companies in the world for 50 cents on the dollar. His upside isn't 10%. It's 100%, 200%, 500%. The message is, I am happily willing to lose 10% to give myself the chance to make 500%. That is the entire wealth architect blueprint.
Okay, Julian. Decoding these 5 signals feels like putting on a new pair of glasses. It just shifts the entire narrative from I'm losing to I'm waiting. So how do we translate this billionaire level blueprint into practical everyday actions for the architects listening?
The core principle is to work with your body, not against it. When that FOMO craving hits, instead of immediate resistance or guilt, you pause and decode. Ask yourself, am I feeling this craving because of fundamentals or because of a headline? Is this asset priced for a crash or for growth? Am I reacting to the crowd or acting on my blueprint? This mindful check-in is your N1 defense. Then you respond appropriately. 1. Hydrate first. Pay yourself first. Sometimes thirst is mistaken for hunger. In investing, uncertainty is mistaken for a buy signal. The first response is to pay yourself into your own fortress. Put that money into a 5% T-bill or high-yield savings account. You immediately calm the craving because you are also earning a Buffett-level risk-free return. 2. Choose healthier swaps. Find protein. If you must invest, don't buy the sugar, the high-flying tech stocks. Go find protein. Look for high-quality, dividend-paying stocks in boring sectors that have not hit all-time highs, like utilities or consumer staples. These are nutrient-dense assets. 3. Practice mindful indulgence, the 1% rule. This is a powerful behavioral trick. If you just can't beat the FOMO, manage it. Take 1% and only 1% of your portfolio and put it in a play account. Buy that high-flying stock. Satisfy the craving in a controlled, mindful way. This protects your real fortress from your own psychology. 4. Cultivate self-compassion, the asymmetry mindset. You will miss a rally. Buffett misses them all the time. You must be okay with that. The goal is not to win every hand. The goal is to be the last one at the table with all the chips when the real game begins.
This feels so much more sustainable. It's about having a design that anticipates your own psychology rather than just trying to fight it.
That is the only way to build lasting wealth.
So the 5 key messages Buffett is decoding from the market's cravings. The yield signal? Cash is a 5% asset, not 0% trash. The game has changed. The concentration signal. The market is on a sugar high from 7 stocks. It's not healthy. The insider signal. The smart money is selling to the FOMO crowd. The credit signal. The gut of the real economy is sick, and the brain, stocks, will eventually feel it. The asymmetry signal. He's sacrificing a small potential gain for a massive future gain.
It's about becoming fluent in the market's real language rather than just listening to the noise. This completely changes how I'll view the market tomorrow. Excellent. Now, for everyone listening, what's your biggest market craving? Is it the insider signal that scares you, or is it the FOMO you feel every day? Share your biggest aha moment from this discussion in the comments below.
And if you're ready to stop fighting the market and start designing your freedom, hit that like button, subscribe to Wealth Architect, and share this video with anyone who is tired of feeling like a follower. Next week, we're doing a deep dive on signal number 4. We're calling it the gut of the economy. We're exposing the 3 specific cracks in the real world, from commercial real estate to the buy now, pay later bubble that could trigger Buffett's Black Friday sale. You won't want to miss that blueprint. Thank you for tuning in.